Hello, good morning everybody. You're with Martin Penev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with short coverage of what happened yesterday. US markets, the Dow went 24 pips up, Nasdaq almost 70, the Dixie Index is up to 89.31. Major move. Monetary policy statement yesterday. Economic activity is expanding at a moderate pace. The labor market conditions improved further with a solid job gains and a lower unemployment rate. The economic conditions may for some time warrant keeping the target federal funds rate below levels the committee views as a normal in the longer run. Yellen doesn't see the rates rising before April. The FOMC economic projections, charts on inflation, GDP, unemployment rate, all are positive for next year. The dollar has surged 13% in the past 6 months, the best performer among 10 developed nation currency tracked by correlation-weighted indexes. The euro rose 1.3% while the yen tumbled 4.6%. Yellen said that shift in guidance meant the committee considers it unlikely to begin the normalization process for at least the next couple of meetings. The next scheduled policy decisions are January 28, March 18, and April 29. CPI and all of the CPI indicators came out worse than expected. Interest rate decisions, same. NBA mortgage application 10%, LTP CPI excluding food and energy month-on-month 0.17. Current account for last quarter 0.26 billion. Today, unemployment data, services PMI, CB leading indicator, and manufacturing survey. European markets, the German DAX 30 made a substantial jump with almost 230 points. The French CAC 40 has followed with over 110. The US currency matched the strongest in a week against the euro after strengthening yesterday's when Fed Chair Janet Yellen said rates would probably be increased gradually once economic parameters were met. The euro dollar 180 pips down yesterday, adding negative pricing as we speak. Euro New Zealand dollar 27 pips down with 265 range, down by 70 pips already today. Euro Aussie 30 down with 210 range, going down today. Euro pound 25 pips down, adding negative pips today already. The Swiss National Bank introduced a negative deposit rate to stave off inflows from investors seeking a safe place to park their funds. The SNB is imposing a charge of 0.25% on sight deposits, the cash-like holdings of commercial banks at the central bank. This is what they said in a statement today. The SNB confirmed its commitment to the minimum exchange rate of 1.20 francs per euro, saying it would defend the cap the utmost determination and takes further measures if needed. The Swiss franc is currently suffering from that decision as we speak against its all major rivals. We are to see some reports from the Swiss economy with regards to the economic forecast and the trade balance along with exact exports and imports data. We will also see the German IFO business expectations for the next 6 months along with their current conditions. Later on, the ECB will print the construction output year on year and month on month. UK markets, the FTSE 100 gained 130 pips almost yesterday to 6,336. The pound dropped by 0.5% versus the dollar after the interest rate vote kept the status quo for 7 versus 2 MPCs. The sterling touched a low of 1.55425 per dollar. Unemployment is at record low, 6%, which was one of Mr. Carney's targets for the interest rate hike. Wages grew 1% in the third quarter. However, this increase has not eased the Bank of England's concern over the midterm inflation. However, the biggest concern expressed during the minutes was the falling oil prices. GBP USD 171 pips down yesterday, 200 pips range going up today, versus the Japanese yen 140 pips up yesterday, 227 pips range going down today, versus the Aussie 23 pips up yesterday, almost 300 pips, 280 pips range going sideways, versus the Canadian dollar almost 200 pips down yesterday, 250 pips range going up today. The retail sales reports are due for today with the UK markets. Moving along to Asian markets, Nikkei 390 pips up, Hang Seng almost 200 pips up, S&P 200 almost 50 pips. Asian stocks advanced after the US share rally. Basically, top 20 bond funds sold in Japan decline on Russian crisis. The GDP for New Zealand contracted. Today, the Chinese house price index showed contraction of almost 1%. The Royal Bank of Australia bulletin discussing economic and financial developments in the form of articles and speeches is shown today. Australia's dollar rallied from a 4-year low as a gain in Asian stocks spurred demand for higher yielding assets. A gauge of currency volatility climbed to the highest in 15 months. USD Japanese yen 260 pips range, Aussie dollar 131 pips range, the Kiwi dollar 110 pips range. Tomorrow, Bank of Japan press conference and monetary policy statement. Commodities. US crude oil inventories fell by 0.847 million barrels in the week ending December 12 at the while short of expectations for a decline of 2.36 million barrels. The draw sent prices rising by stocking perceptions that the commodity is oversold. S&P 500 jumped most since October 2013 due to Fed's decision about interest rate and energy shares. The US Congress is talking about allowing all exports for the first time in almost 4 decades, but its timing couldn't be worse. Almost $5 range yesterday, about $1.20 appreciation of the oil price in yesterday's trade. Gold had almost $20 range, lowest and highest, ended yesterday's session with $7 drop. Silver had a few cents decline, little change in its price. Natural gas had a range of 12 cents, finished the session with 6 cents positive. The natural gas storage change data is due to come out today. That was all from me. Thank you very much for your time. Cheers, and I wish you a successful trading day. Bye-bye.